PNB's Q3 interest income and margins beat expectations, and the highlight was a huge over 2,000 crore rupee recovery from written-off accounts. The bank's profit also did not disappoint, despite the fact that it used some of its profits to actually increase its provision coverage ratio and also to provide for wage settlements. In spite of it, the profits were in line. The margins remaining flat again is a huge positive at a time when all banks are announcing a fall in margins. Joining me to discuss the results is Atul Kumar Goel, Managing Director and CEO of Punjab National Bank. Good morning, Mr. Goel. Thank you very much for joining us. Well, margins, that's the talking point. The fact that you have been able to maintain that, your loan yields are up. Can that continue in Q4 and next quarter as well, this maintaining margins?
Very good morning, Latha. As far as the margin is concerned, the global NIM is 3.15 as against the domestic NIM of 3.30. So we have given the guidance for the whole of the year. It will remain in the range of the 3%. So we are confident we will maintain 3% NIM also. As far as your question regarding the yield also, the yield definitely, because on account of the recovery from the NPA account and the assets quality has improved, so we are hopeful whatever the yield we have got in the 8.54%, it will remain sustainable also.
Okay. But the big point this quarter is that, as you pointed out, loan yields went up for other reasons as well by 30 bips quarter on quarter. But your cost of funds have gone up only 10 bips quarter on quarter. Are they likely to go up further because there is this mad rush for deposits?
You are very much right. The increase in the cost of deposit was hardly 10 basis points. So I do not foresee, although there is an increase in the interest rate in the last 1.5 months, but because we are having the 42 or 43% CASA and my 95% deposit has already been repriced, only 5% is remain. So I do not foresee there will be too much of the uptick in the cost of deposit also in times to come.
No, repricing you won't have a problem. Perhaps, as you point out, 95% is repriced. But as you go for fresh deposits, will there be a pressure on margins?
Definitely, because the cost of the new deposit, the incremental deposit has increased the 40 to 50 basis point in the last 1 and 2 months. So definitely there will be the pressure on the incremental deposit. But because as I told you, we are having 40 to 43% CASA, so not more than 10 basis point in the entire cost of deposit. I am thinking it will not increase much more.
But yeah, many congratulations for that. You're one of the few banks that showed a rise in your current and savings account ratio, your CASA ratio, by about 30 bips. Can that continue?
Because we are having 10,000 branches, pan-India presence we are having, so we are giving thrust to the opening of the saving bank and current account. So I think we will remain in the 42 to 43%.
Okay. Well, that's good to hear. We have State Bank results coming on Saturday. Let's see. They have more branches than you have. Let's see whether they are able to deliver. Now, you're one of those few banks where the loan deposit ratio is not, this ugly 80%, 90%, 100% that it is with some other banks. So that gives you a lot of scope to increase advances, even with the current deposits. What is the kind of advances growth guidance you can give?
You are very much right, Latha, because guidance we have given 12 to 13%, but after this post budget also we are thinking, because capex is also some of the company they are also thinking for the capex. So guidance is 12 to 13%. As far as gap in the deposit is concerned, so we are not in a much difference in the deposit growth as well as I am having the 80,000 crore rupees extra SLR. So credit growth is not a issue for me.
No, that is the point. That's the point. Yeah, you're guiding only 12. That is why I'm asking you, will you do better than your guidance? Because there are so many banks who are going to forego their loan growth. I mean, HDFC Bank almost said that because they have to collect deposits at a higher cost. Many of them are going to forego their loan growth, and they are not alone. There are a lot of banks, private sector banks, where the loan deposit ratio is very high. So, therefore, will you do better than what you're guiding?
If opportunity will come for the advances, there is not a issue. But guidance we have given 12 to 13%. If opportunity will come for the, because there should be demand also as on date. Yeah.
No, but demand, you have done very well on corporates and MSMEs. You are one of those few banks where retail has actually declined quarter on quarter. So can you explain both? Will you not go after retail for whatever reasons because of what the Reserve Bank's risk weights or anything? Or will you continue to go? And corporates, how is it that your corporate and MSME is doing so well? What is the guidance there?
Latha, as far as RAM is in the range of the 55% and corporate is around 45%. The growth in the retail is more as compared to the corporate. Also, if you see my 12.90% growth in the total advance, whereas the growth in the retail is 19%, RAM is around 15%, and the corporate growth is the 10%. As far as we are not very, because unsecured on account of the RBI, whatever you are telling, my unsecured loan is very less. As a personal loan, it is only 26,000 crore rupees, and out of which 3,500 crore rupees is the education, then 4,000 crore rupees for the pensioner loan, and the pensioner loan out of 4,000 is the digital. That is working well also. Their NPA is 0.40%. So we are both sides. We are doing the both side RAM as well as the corporate, because we are the largest bank of the country. So our thrust on the corporate side also.
Quarter on quarter, your retail advances came down by about 2%. That's the only reason why I asked whether.
Yeah, that is right. That is right. Yeah, quarter to quarter, the thrust area is the focus area is the RAM, retail, agriculture, and the MSME also.
Okay, time permitting, I'll come back to this. But in a minute, I want to first look at your the huge recovery you have got, over 2,000 crores from written-off assets. Now, you have quite a few assets in NCLT. Can we expect, can you give us some guidance on recoveries going forward?
Our main focus, Latha, is on the recovery side also, and the last year also we have set a target of the 32,000, against which we have recovered 29,000. This year we have set a target of the 22,000, and we have already recovered 17,000. As far as NCLT is concerned, the first 2 quarters of the current financial year, recovery was within the range of the 500 to 600. Third quarter, the recovery was 1,800 crore rupees, and the last quarter of the current financial year, we are expecting the recovery of the 1,200 crore rupees. We are having the huge book of the technical return of account, around 90,000 crore rupees. This was the reason there was a recovery of around 2,000 crore rupees in the recovery from the return of account.
Okay, so can you just repeat the number? What are you expecting in terms of recovery this quarter and next? Q4 and Q1, you may have a visibility?
Because 70,000 crore rupees as against the target of 22,000 crore rupees, easily we will be in a position to recover around 5,000 crore rupees in the last quarter of the current financial year, and we can set the same number also in the next 2 quarters of the next year.
Oh, that's excellent. That's very good to hear. Can you therefore give us some idea of, of the cost side as well? You have set aside some money for wage negotiations, wage settlements. Will there be more of that will be settled? And can your credit costs come down even further? You brought your NPA down below 1%. So should we expect lower credit costs? And what do you have to say on wage settlements? Anything more in terms of provisioning?
Latha, first I will give the answer of the credit cost. Credit cost, if you see the 1.21% for the last quarter, and for the 9 months is the around 1.5. So definitely it will be less than 1%, because my provision coverage ratio is around 94%, more than 94%, and aging requirement is reduced drastically. That is coming on around 500 crore rupees per quarter. So it will be definitely less than 1%. As far as your question regarding the wage revision, revision for this quarter, we have provided 800 crore rupees, and 17% we have provided the wage revision from the November 22 to December 23, because earlier we have provided September of 14%. The difference we have provided, so we have provided the adequate amount of the wage revision, because the 17% was settled was there, but actually will be less than. So 17% is a very handsome amount we have already provided.
Okay. No, I just want to know in terms of guidance. Cost to income ratio has fallen, obviously, because credit costs have fallen. So can you give us some guidance on credit cost as well as cost to income? Can it fall even further from 51.2?
Yeah. As far as credit cost is concerned, that will be further fall, because that will be the less than 1% in the next quarter as well as the next year. As far as cost to income ratio is concerned, it will be remain within the range of the 50 to 51%.
Okay. Oh, okay, that's very good to hear. The market's kind. Will you be raising capital?
As far as capital is concerned, we have already got the approval of the board for the 12,000 crore for the current financial year. Out of which 7,000 was the tier 1 and the 5,000 for the tier 2. The tier 2 we have already raised 3,019 the current financial year, 4,153 crore rupees we have raised. Tier 1 also. So we will raise some tier 1 also in the last quarter of the current financial year. In addition to that, 7,500 crore rupees we have got the approval for the board for the next year, QIP and the FPO also. So that we will raise adequate time, yeah.
When will the QIP, I mean, will it be early because the market's good? Can we expect the QIP at an earlier date?
Because Latha, we have got the approval of the board in the last meeting also. So I think in first half of the next financial year, we will try to raise the money from the market by way of the QIP or FPO.
Okay, well, today the Bank Nifty is up 1.74 and it looks like it will catch up. Its problems are behind it. So we'll have to wait and see. That's why I was asking you if you would hurry. Thank you very much, Mr. Goel, for answering so many questions about the bank and congratulations for a very good set of numbers.
Thank you very much, Latha.
Well, as we were speaking, we have seen a fairly decent jump. The Bank Nifty is up 1.7% and a large part of it is courtesy HDFC Bank up 1.4%, and that's courtesy LIC's announcement and the permission it's got from the Reserve Bank. Kotak is the other bank that's leading from the front, up about 2.6%, and another very big heavyweight. But the whole range of banks are doing well. But for the other markets, the broader markets, the Sensex in the Nifty and the broader markets, it's the Adani Group that's absolutely up and away thanks to Cantor Fitzgerald's report. We wrap up on Bazaar on that positive note. Chartbusters up next.